All right, guys, the new inflation data just landed, and let me tell you, this is not the update anyone was hoping for. No one likes this information. No one. The government, the RBA, property investors, property buyers, property owners. Now, inflation came in hotter than expected, and it's completely rattled the market. Economists didn't forecast this. No one really saw this coming. The banks didn't see it coming. Even traders were blindsided. And now all of the neat little predictions about where the economy was heading, they've been thrown straight out the window, because suddenly the question isn't, when is the next rate cut? The question is now, has the cutting cycle already ended? And even worse, are rate hikes back on the table? And look, if you're a homeowner and if you're trying to buy your first place, or if you're an investor just trying to figure out what the hell is going on right now, this changes everything. So stick with me in this video. I'm going to break down exactly what the inflation numbers were in simple English and why this has shocked the market, what CBA, NAB, Westpac, and ANZ are now forecasting, and ultimately, what does this mean for you, your repayments, your buying plans, and the entire property market heading into 2026? Let's get into it. Let's start with a number that detonated everyone's expectations. Inflation jumped to 3.8% in October, not 3.6, not 3.7. 3.8%. That's the biggest monthly upside surprise we've seen since the RBA started cutting rates earlier this year. And the RBA's preferred inflation measure, the trim mean, also rose to 3.3%, which is well outside their 2 to 3% target band. The translation, inflation isn't falling, it's creeping back up. And the RBA absolutely hates that. And what's driving it? Housing costs, rents, construction, and a massive 37% spike in electricity prices as state rebates ended. This is why the market freaked out. This is why economists started rewriting their forecasts in real time. Because if inflation is rising again in the middle of a rate cut cycle, the RBA's entire plan is now up in the air. Let's talk about the big four, because their responses tell you everything about how serious this is. Let's take a look at CBA. Now, CBA came out swinging. They've said flat out that the easing cycle is basically over. That means no more rate cuts ever. The next rate move will be up. Not this year, not early next year, full stop, no more rate cuts. NAB, what have they said? Well, NAB have backed CBA. They're saying the same thing. They've pivoted hard. Their economists are now warning there may be zero rate cuts until well into 2026, and that is if we even see another rate cut. ANZ, well, ANZ just released a very cautious note. They said, this result increases the risk of the easing cycle coming to an end. The translation, yeah, we might have been wrong too. Westpac is the only one still hanging on to the idea of 2 more rate cuts. But even they're saying, look, it's all looking a lot shakier now. And then you've got the wild cards. Barrenjoey and UBS both saying, forget cuts. We're calling a hike in rates next year as early as May. This is not normal stuff. This is a complete rewrite of the script. This is the part nobody wanted to talk about 2 weeks ago, but now everyone is talking about it. Could the RBA actually hike again? Well, here's what changed. Inflation is rising. Electricity rebates have ended. Housing inflation is accelerating. Goods inflation is bouncing back. Rents are still ripping hard. They're increasing. They're going through the roof. The rental crisis hasn't ended. And the job market is still too strong. Economists are now openly saying if this trend continues for the next few months, the RBA may have to hike. And the money markets agree. Traders have already priced in the chance of a rate rise late next year. So yes, a hike is on the table. No one wants it, but it is on the table. It is there. It is a possible reality, which we may see. What does this mean for homeowners? Well, if you're a homeowner, here's the reality. Fixed rates are already going up. CanStar found at least 18 lenders have increased fixed rates in November alone. Big players, including Westpac and Macquarie. And the number of sub 5% fixed rates, that's collapsing. We went from 46 lenders offering sub 5% deals to just 36 in 1 month. So if you're thinking about fixing, now's the time to talk to your broker. Waiting is only going to get more expensive. What does this mean for home buyers? For home buyers, especially first home buyers, the big question is, will this make property cheaper? The short answer is no. Now, why is this so? Because the housing shortage is still massive. Investor activity is rising again. Listings are still low. Migration is high. Rents are squeezing everyone, and supply is stuck. It is bottlenecked. SQM research said even with no more rate cuts, Every capital city is still expected to grow in 2026. Some, like Perth, Brisbane, and Adelaide, could still see 10 to 14% growth. So no, higher inflation doesn't mean a price fall. A possible rate increase on the table will not see property prices fall. Affordability is still going to get worse. And now for investors, let me be clear. This inflation shock isn't slowing them down. If anything, it's making them move faster. Investors can see exactly what's happening. The 5% deposit scheme pulling thousands of new buyers in, wages rising, migration staying high, rental markets the tightest they've ever seen, and supply still miles behind where it needs to be. This is the perfect setup for rising prices. And remember what happened during the last RBA hiking cycle. Yes, prices dipped at the start. That initial shock hit everyone, but in the second half of that tightening cycle, the market rebounded hard. Prices pushed higher even while the cash rate kept climbing. Investors haven't forgotten that. And with every major forecaster, Westpac, NAB, ANZ, CBA, KPMG, Domain, SQM, all of them predicting 7 to 10% growth in 2026, investors are not waiting around. They want to get in before the next jump. That's why investor lending just surged to almost 40 billion last quarter. They're not confused, they're not scared. They see the setup, they see the conditions which are there, and they're moving now, not after prices are another 10% higher. So where does this leave us? Inflation has come in hot. Rate cuts are basically dead. Some analysts are calling for hikes. The big banks are absolutely divided. The market is rattled, but the property market, it's not rattled at all. I want to be super clear on something. Higher inflation and rate increases on the table, and even 1 or 2 rate increases, does not mean cheaper house prices. In fact, historically, it does the opposite. Australia's housing shortage isn't going anywhere. Migration isn't going anywhere. The 5% deposit scheme is still pulling future buyers into the present, and the investor wave is still building. So yes, this inflation print is brutal. Yes, it's going to hurt sentiment, but no, it is not slowing property down. If anything, it's making the window smaller. So what do you think the RBA will do next? Hold, cut, hike? How do you think this new inflation result is going to hit the market? Drop your thoughts below. This is your daily property update, your 5 to 7 minute breakdown on the property market every single day so you can stay ahead of the market and become a true property insider. Make sure to hit the subscribe button so you never miss a video. By the way, I did a really great video on one of the big research houses and their predictions for 2026 right here. Go ahead and click onto this video and watch that video right now.